trying to keep up with crypto and, well, the whole financial market roller coaster.
Hmm.
It can feel like you're assembling a puzzle, but the pieces just keep changing shape on you.
Oh, definitely. One minute you think you've got it, next there's some new headline, some big market swing, and everything's up in the air again.
It's just this constant flood of information, isn't
Yeah.
it? Plus, how volatile everything is. It makes it really hard sometimes.
Yeah, separating the real signals from just background noise. That's the challenge.
And that's exactly what we're going to try and do today. We're doing a deep dive into a recent YouTube video. It's from Satoshi Stacker, and the title is Bitcoin. 95% of people are not prepared for this next major move.
Quite the title.
Right. So our mission here is to really pull out the key insights, the potential future scenarios they're talking about in this video. Just try to give you a clearer picture of what might actually be significant right now.
Yeah, we'll look at the technical analysis they presented, how different altcoins are performing or maybe not performing, what's happening in traditional markets, even some of those, geopolitical headlines that the video gets into.
Basically, your curated guide to the core arguments in that video.
Exactly.
Okay, let's dive right in then. Bitcoin technical analysis. The video seems to put a lot of weight on Bitcoin closing above and then opening above this yellow dotted line on their charts. What's the deal with that? Is it significant?
Well, this yellow dotted line, it's likely, a specific resistance level that this YouTuber tracks closely. It might not be standard across all charts, but for their analysis.
Sure.
When Bitcoin closes above a line like that, and then opens the next session above it too, that's often seen as like an initial bullish sign. It suggests buyers might finally be getting the upper hand over sellers at that specific price.
An initial sign, though.
Exactly, initial. Because, as the video rightly points out, it's not a guarantee. You can get false breakouts. We've apparently seen them even above this specific line before where it pops up and then, nope, right back down. So it's something to note for sure. An early signal, maybe. But it absolutely needs confirmation. You need to see it hold.
And that confirmation, that would be sustained upward movement, basically. It needs to keep going up from there.
Pretty much, yeah.
Okay, so if we do see that sustained move, what are the next hurdles the video mentions? There's talk of an orange line, the 50-day moving average. What's that about?
Right, the orange line or the 50-day moving average, that's a pretty common one. It's a short-term trend indicator. Think of it as the average Bitcoin price over the last, 50 days.
Simple enough.
If the current price gets above that average and, crucially, stays above it consistently, it generally suggests the short-term mood, the sentiment, has shifted towards the buyers. So seeing Bitcoin break and hold that level could signal increasing momentum, at least in the short term.
Okay, so 50-day first, and then beyond that. The video mentions the 200-day moving average, somewhere around $87,000.
Yeah, the 200-day, that's a much bigger deal, typically. It's often used to gauge the longer-term trend. Getting over the 200-day moving average, that can signal a more substantial, maybe longer-lasting bullish shift in the market. It's a heavier line to cross, so to speak.
Gotcha. And the video also flags specific price points, right? Previous highs, $85K, $87.05K, $90.05Ks. Why are those important to watch?
Those are previous peaks or swing highs. They often act as psychological resistance points. Just imagine, traders who bought maybe near those tops last time.
And watched it fall. Yeah.
Exactly. So if the price gets back up there, some of those folks might be thinking, okay, chance to get my money back, or maybe I should take profit before it drops again. So you often see selling pressure increase around those old highs.
So breaking through those levels would be pretty significant then.
Very significant. If Bitcoin pushes through those with real conviction, strong volume, it suggests the buyers are serious and believe the price can go even higher. The YouTuber sounds optimistic that these levels will eventually break, but the key takeaway is it's a wait-and-see game. You need to see that sustained momentum push through these resistance zones.
Wait and see. Okay, now let's pivot a bit to the altcoin market. The video makes a pretty sharp contrast between how Bitcoin's been doing lately and how, a lot of other cryptos, especially Ethereum, have fared since the last pullback. What's this divergence telling us?
Oh, that divergence is really interesting and important, I think. It tells you the market isn't just one big blob moving together.
Right.
Bitcoin's shown some relative strength, sure, but Ethereum and many other alts kind of stalled out or didn't bounce back nearly as hard. It suggests different parts of the crypto world are reacting differently.
Why would that be?
Could be anything, really. project-specific news, maybe tech updates, maybe just investor narratives shifting. It means maybe the individual story of an altcoin matters more right now than just riding Bitcoin's coattails. You kind of have to look beyond just BTC price action.
Makes sense. The video gives a few specific examples. Solana is mentioned as looking, quote, relatively better. It got back to its previous consolidation level. What does that mean?
Yeah, Solana bouncing back to where it was trading sideways before the drop. That suggests there's still decent demand there. Resilience. Consolidation's like a pause, right? Buyers and sellers are balanced for a bit. So Solana getting back into that zone implies buyers are still interested at those prices. It might be in a stronger spot than coins that are still way down.
Okay. Then there's Dogecoin. Apparently took a massive beating, but is now in a trading range. How do you read that?
Well, massive beating tells you there was heavy selling, obviously. But finding a range now means, okay, the free fall stopped. Buyers are stepping in at certain lower levels, putting a floor under it for now.
So some support, but maybe still shaky.
Could be. It means the really strong negative push is over, perhaps, but it doesn't necessarily mean it's ready to rocket up either. It might just bounce around in that range for a while until something breaks it, up or down.
All right. And Cardano. It's noted as being at a previous consolidation level or a swing low. The YouTuber seems to see that as positive. Why?
Similar idea to Solana, really. Finding support where it found support before, either where it traded sideways, consolidation, or at a recent bottom point, swing low, suggests buyers remember those levels and see value there.
Right,
Could
yeah.
be a sign of stabilization. Maybe a base is forming for a potential move back up. It suggests buyers are defending that territory.
And lastly, XRP. Highlighted for finding very nice support levels and staying above a specific yellow line at $1.96. Key takeaway for XRP.
Yeah, XRP holding that line again, probably a key support the YouTuber's watching shows noticeable buying interest, keeping it afloat. It suggests relative strength, especially when you compare it to, say, Ethereum, which the video paints as the major underperformer among this group. Right. So it just hammers home that point again. The altcoin market isn't moving in lockstep. You really have to look at each coin's individual picture.
Definitely. Okay, let's broaden the view slightly. Traditional markets. The video mentions this anticipation around the futures market opening, how it might react to recent headlines. Why does that connection matter for crypto watchers?
Because nothing exists in a vacuum, right?
Yeah.
Especially not crypto anymore. The futures market, particularly for major stock indexes, gives you an early read on broader market sentiment before the main stock exchanges open.
Kind of like a sneak peek.
Sort of, yeah. If there's big news overnight, maybe trade war stuff, Fed comments, whatever, you'll often see it reflected in futures first. And that mood, positive or negative, can easily spill over into other asset classes, including crypto.
So watching futures gives you a heads up on potential market-wide volatility or direction shifts.
Exactly. It helps you understand the broader context crypto is trading in. These markets are definitely interconnected.
That makes sense. It was also pretty interesting that the YouTubers shared their own trading performance, being down, what, $900,000 overall?
Yeah, quite a number.
But then highlighting that their trading bots, their algorithms, were actually profitable, specifically mentioning XRP and Cardano bots making money even while the prices of XRP and Cardano themselves dropped. What's the insight there?
That's a really key illustration of a certain type of trading strategy. It shows you can potentially make money from volatility itself, not just from the price going straight up.
How does that work?
Well, these algorithms, these bots, were likely designed to trade the swings, buying dips, selling rips, within a defined range, maybe. So even if the overall price of, say, Cardano drifts down from where the bot started, the bot could still be making small profits on all those little up and down movements along the way, scalping profits from the chop, essentially.
Ah, okay. So it's not about buy and hold appreciation. It's about actively trading the fluctuations.
Precisely. It's a different approach. It focuses on capturing profit from the market's choppiness using an automated strategy, shows there's more than one way to navigate these markets, especially volatile ones.
That's a really useful distinction. Okay, let's get into those specific headlines the video flagged as potential market movers. First one, China raising tariffs to 125%, but also saying they won't go higher, even if the U.S. does. What's the potential signal there?
Well, China drawing that line in the sand, it could suggest a limit to how much worse this specific tariff spat might get, at least from their side.
Because U.S. imports are already expensive for them.
That's the implication in the video, yeah. So maybe it injects a tiny bit of predictability, could reduce some uncertainty if that holds true. Markets hate uncertainty.
Right. But then, on the flip side, the U.S. reportedly warned China privately not to retaliate, and China, well, they retaliated anyway. What does that tell us?
That definitely highlights the ongoing friction, doesn't it? A lack of smooth cooperation. China